Hi, welcome back to the monthly portfolio update. I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Saturday, March 1st, and can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful since it's your responsibility to do your own research before investing. In this month bonus section, we'll talk about the quote-unquote mistake I made and the bigger theme of why bulls make money, bears make money, but pigs get slaughtered. But first, let's begin as usual with the portfolio activity in the past month. During February, I had a somewhat contrarian risk-off approach and closed the two risky positions I began selling last month, Tesla and Prosus, and also sold a little bit of Alibaba after I had a great run, but I still own quite a few shares, about 2.12% of the portfolio. In the last week of February, also, de-risking actually proved to be a good thing since markets started to go down a bit. On the buying side, I bought a little bit more Norofert and Denagrar. Both are agricultural companies from Romania, which seem to me beaten up and expecting a better agricultural year this year. I also bought some more Evergent investments and loaded on Romanian government bonds for 1 year. Last but not least, I also got some more altcoins through the various Learn and Earn programs. In terms of cash flow, I just got a coupon from my corporate bonds Restart Energy 1. I should have received on February 28 a similar coupon from Impact Developer in Euro, but the payment didn't go through, so it will likely come next week. However, with the sale of the three assets, the cash position is super strong, maybe too strong, some would say. That being said, the portfolio as of March 1st, 2025 is looking like this. Please pause the video if you want to analyze each investment in detail. The main thing is that Tesla, ticker TSLA, and Prosus, ticker PRX, disappeared from our list since the positions were completely closed. Also, we can see the decrease in Alibaba, and we have the corresponding increase in cash. The current pyramid allocation portfolio looks something like this. Overall, the portfolio was unfortunately down minus 0.6% for the month, but after a great January, it was somewhat predictable, and actually I was expecting worse. The main event was the significant drop in crypto, but also the markets are a bit weak right now. We can see the significant decrease in growth stocks due to the exits from Tesla and Prosus and the 30% reduction in Alibaba, and the money is of course visible in the cash position. Before going to the next section, if you are interested in more videos like this, please leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we'll talk about a quote-unquote mistake I made and the major theme of why bulls make money, bears make money, but pigs get slaughtered. So, what was the mistake? The day after I sold my last Prosus shares, Trump decided to postpone the China tariffs until April, and I saw a 5% one-day surge in the stock, which made me wonder why did I decide to sell. I was lucky enough to be able to take half a day off just to think about this issue. Of course, I couldn't foresee the event that triggered the surge, but did I have good reasons to sell, or did I just do it to have one less item in the Excel file? In my defense, the amount was small, so the absolute numbers made no difference whatsoever, maybe a few €100. But as usual, the problem is not always the problem. The question that was nagging me was, is there a deeper issue at hand? Of course, I can mention that 1. I reduced my risk. 2. I got a 46% profit on the trade. 3. My strategy is sound. I didn't lose any significant money in the past 3 years using the pyramid portfolio. It is not a core holding, meaning an asset that I hope it will go to 100x, etc. All true and could justify the sell, but the whole truth is that I still was hurt a little bit. I had a nagging feeling in the back of my mind. Did I sell just because I felt the need to make a trade? Did I wanted to get rid of it just because I want less items in my portfolio, the punch card approach? Oh, do I have a problem selling winners too fast? Remember, I also sold Transgas, which proceeded to go 36% higher afterwards. Unfortunately, I don't have an answer for you right now, but just to know that this might be a problem, I think is a step in the right direction. What makes things more interesting is that I also sold the last Tesla shares, which proceeded to drop after. So you might say you win some, you lose some. But I am in good company. Super investors, including one of the greats, Stanley Druckenmiller, sold Nvidia just before its latest price increase. You can read more in the link below if you want to. So, even though I made a 46% profit on the trade and didn't lose any significant money so far in the past 3 years, why am I still unhappy with the decision just because I didn't catch a local top but fell short of it? Of course, you can't have only flawless victories, and it made me think of the Wall Street saying, bulls make money, bears make money, but pigs get slaughtered, which is an old investment industry maxim that warns against being excessively greedy. Some amount of greed is of course good, but being too greedy is not. So be happy with the wins you get when you get them. So why did I share this with you? To show you and maybe have a reminder for myself that it's not all roses in investing, and even making money comes with its own problems. In today's day and age of social media followers and copycat trading, a quote unquote super investor loves his fellow investors the same way the farmer loves the piglets he's raising. He feeds them daily, he takes care of them, he actually feels sorry and gets upset if they get sick and die. But in the end, he knows he is going to slaughter them for meat. I love as much as everyone to hear Ray Dalio's news opinion on the market, or Jamie Dimon's perspective on where inflation is going, or insert name of super successful billionaire investor here doing whatever. But in the end, when push comes to shove, this is a close to a zero-sum game. So if they need to shield a position so they can have liquidity to get out, they will. So, in conclusion, what did I learn from all this? And hopefully you will learn too from this story. One, losing money hurts, but also making less money than you could hurts as well, which is kind of stupid. But if I am to choose between losing money and not making enough money as I could, I would choose the latter every time. Second, don't beat yourself up if you make a mistake. Even the best make them quite frequently. What's important is that at the end of the day, week, month, year, you are making money. Last but not least, hubris can be a problem, and humility is the only antidote. Ask yourself always, am I confusing intelligence and skill with just having good market conditions? A final suggestion is to read a lesser known book called The Art of Execution. Very short but contains valuable information. And also, it will help you to build a process for trading in and out of investments. You can also check, of course, my investing rules for free. The PDF is in the video description. Or why not do both? In the end, the only thing you can do is to create a process for yourself and follow it. Please let me know down in the comments what do you think about this video, and have a great month. Bye bye.